look at, let's say yen and DXY. The DXY is selling now. You can see what DXY is doing. You can see that the bullish momentum on DXY is still weak. Let's start with the monthly. So this month has been bearish. All right, it's been bearish. And it's likely, okay, if you go down to weekly, I'm sure there's a fair value gap on the weekly or the daily time frame. Let's go down to daily. Okay, so last week we had what looks like an engulfing. This is an engulfing pattern. We had a fair value gap here. The XY might want to come fill this fair value gap. Let's go to 4 hour. Okay. So if it breaks out from the current support, then it's coming to fill this fair value gap. It breaks out from this support. It breaks out from this support, then it's coming for this fair value gap. Let's see yen basket. Let's start with the weekly. So this week, what have they done this week? They've swept the liquidity residing at the high of last week candle. And you can see we also had a fair value gap here. That fair value gap has been filled. This is the weekly time frame. That fair value gap has been filled. And after price filled that fair value gap, what pattern do we have on daily? Let's see. So you can see the pattern we currently have on the daily time frame. And on the daily time frame, we had this fair value gap on the daily time frame. Price filled that fair value gap. Then we go down to 4 hour. Let's see the bearish reversal pattern has formed on 4 hour time frame, right? We had a shooting star. Okay, we had a shooting star. And go down to 1 hour, identify a fair value gap that it has created. So price is likely going to pull back to fill the fair value gap. So you could wait for price to pull back to fill the fair value gap. You could also start selling yen from the current market price. But in this case, you wouldn't go all in. Okay, you wouldn't go all in. You can just go in with maybe 30% of your maximum daily drawdown, 30%. So if your maximum daily drawdown is $50, you can just go in with 30% is about $15. Calculate the risk, market risk. Then with that, you get your, what's it called, the lot size to apply on the trade. And when price pulls back into your area of interest, then you go in with the remaining $35. Okay, that because that price will pull back to this zone is a probability, it's not guaranteed. So if you don't want to miss the move, it's best you go in. That's what I did on GU and EU this morning. I just went in with small lot size, and now price has pulled back to my area of interest. So I think I need to execute more trades. You get it? So I think yen is set for sell. Set for sell. So let's look at GBP JPY. GBP JPY should be bullish at the moment. Okay, should be bullish. Okay. So I think GJ is going to come for this high. So you could work with this, what's it called? Let's go to 4 hour. So it gave us, you can see we had a doji. So I think the first thing they did this morning when the market opened, the first thing they did was to sweep the liquidity. They know a lot of retail traders would have executed buy. Actually wanted to buy GJ last Friday after the formation of this this doji. Actually wanted to buy because if you go down to 4 hour, if you go back here, you would see we had a fair value gap here. which I marked this fair value gap last week, waiting for price to pull back and fill the fair value gap. So we can see price filled, was it? Okay, I think we had this one here. We had this fair value gap here on the 4-hour time frame. So price came back, filled this fair value gap, broke out, and you can see the market is currently trading above. So I think this breakout was just to probably sweep the liquidity and also get retail traders trapped selling on GJ. That was what played out this morning. I see this as a trap to get retail traders to sell, to jump in and start selling. Yes, so they swept the liquidity, and also you can see we'll still have a fair value gap here also. And you see that we had this fair value gap here. So I think that was the reason. Most retail traders would have executed, most would have bought last Friday. I had a plan to buy last Friday after the formation of this doji. Okay. I said, let me wait for the open of today's market before I would take a trade. So this is a buy on GJ. It's coming for this high. It's coming for this high. Let's see what's happening on H1. So it's created a fair value gap here. So you could patiently wait for price to pull back, maybe to fill this fair value gap. They attempted filling this gap at this point, but they didn't fill it completely. So you could patiently wait. We also have this here. So if I'm going to take a trade on GJ, I'll patiently wait for price to pull back to at least fill this fair value gap. And if a bullish reversal pattern forms after this fair value gap gets filled, then I can take a buy at that point. Breaks out from this fair value gap, patiently wait for it to come fill this fair value gap, wait for a buy setup or a buy pattern to form before going bullish. So GJ is bullish at the moment since the yen is weak. Since the yen is weak, GJ, I expect GJ to buy. You can see they push price up here. We had a fair value gap here.